Hello folks, I'm L.A. Little, and this is your weekly TA Wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves what happened last week and what might tell us about the coming one. I do this show once a week, every Sunday night, live at 9 o'clock Eastern Time here from the base of what is the beautiful Rocky Mountains, folks. We've changed up our lineup up here a bit. If you come into TA Today TV, you're going to see a slight difference from what you've seen previously, and that difference is that now there's actually a couple channels. It's not just the same, only channel. The live stream, of course, you're on tonight, or if you're viewing this from live stream in after hours. These are broadcast live. You can join me here live. But we've created YouTube archive shows now so that you can actually pop into YouTube and do the channels here. And the benefit of this is that you can do them on your mobile device whenever you choose. So there's a channel created here. There's a little video on how to subscribe to it. You might want to check that out. And then at some point, we're going to get the podcast up and running. So be another means of viewing it at your convenience. So getting back to the markets, or going to the markets to see what happened here this last week, we're starting to see some rollover, and it's been a while. This market has been reluctant, to say the least, has been reluctant to roll over at all, but that rollover is starting to take effect, and we're starting to see the consequences of it. So let's start with the S&P. Let's work through some of these. Let's think about what it means. Most of these are coming back now to either do swing point, to the prior swing point highs, doing retest regens, both on the daily in some cases, on the weekly, in other cases on the S&P. That is what's happening, the weekly. The low on it 1635.53. We got down to 1652. So we're into that bar. We don't have the volume yet in terms of the volume pickup. The bar we went over, it does have about as much, 156 on a weekly. You did 153. So you're coming back, but the bar you're really coming into is this one. It's 169. Again, looking here, you can get to the bottom of the bar. The bottom of the bar is where support is on the weekly. That's another 20 S&P points if it so chooses. On the daily's coming back into the swing point highs now from May 31st and the one prior to that. It broke two swing point lows. That led to a faster move. It now has a nice big resistance zone above it as a result of that. The real test, the real question this coming week is what kind of a bounce do we see when it bounces? Right? Do we see it push right back all the way back up here and test this gap area? Do we get back into the 1700 area? How far can this thing bounce, and what does that bounce look like? If I'm looking at it on the daily and I'm looking at the S&Ps, this doesn't look too appetizing, so to speak. The breakout bar in this particular case, 34.4. We did 32, so you can see lighter volume coming back. We closed at 1655.83, and that low was 1657, so you closed under it. You closed into 41 million, and that was the high. So the retest regen, it's already retested up here. It retested for quite a while on that prior swing point high. Now it's coming back to the next one. And we thought that this one would be the one that we'd see it come back to. We thought this area, because it's an ABCD down to there. B, and it's pretty much just about completed it. B, to get back this deep would allow the stronger indexes to actually get back as far as they need to actually do the retest regenerates. And I'm talking about like the NASDAQ and the NDX. On a weekly, they've got a long way to go to get back to that high. It's 35.32. We're at 35. Well, we got as low as 35.98. We closed at 36.02. But you can see here, big gap down on Thursday as well. The retest, regenerate is taking place right now. So this is the place where either this market turns around and gets a bounce, or actually fails miserably and comes on down on the weeklies. And so the longer term time frame is going to be the test, if you will, if it happens that way. So we're going to know very quickly what this market wants to do as we pick up and see what kind of a test that we get. I mean, we've already got the test going. It's going to be, can it pick up and bounce the other way or not? And that's going to happen right away. You're going to see it Monday or Tuesday. So one way or the other, this is going to give us more information, and it's going to give it to us fairly quickly. The index looks the same way as the NASDAQ, and that one's giving us the same sort of a trace back. Swing point higher here is a little bit higher, 30.53. We got as low as 30.73, so 20 points, about 20 points lower. Again, the volumes aren't here, and on the index, you've got exactly the same sort of scenario that you just saw on the Dow. It's testing that swing point highs low. On the NASDAQ composite, it's actually under it. On the index, it's still holding it, but just barely. And if we go to the strongest sector, which is the IWM, that one's actually getting back into the gap finally on the daily. Got a long way to go to get back to the swing point high. Volume coming back is not bad, in terms of size. It's coming back into the breakout bar now, 102.59. Got as low as 101.55, 101.68, so it's inside that bar on the weekly. If we look at the daily, that gap, the top of it is 101.38. We got as low as 101.55. So you can see it's almost closing that gap now. And you can see how the charts have redrawn now to put resistance above it on all these indexes. And if you look at the qualified trends, they have all changed. I mean, if I pull over the trends here, you can see that the IWM now has a bearish trend on the short-term time frame. And that's true of all those indexes. If we were to go back through them, you'll see that most all of them have changed or are on the verge of changing if they haven't. The Dow Jones looks kind of like and I'll go back to it because I didn't do it, but the Dow Jones looks kind of like the SPX but just weaker. The Dow Jones is already back into the low of the swing point high and actually underneath it on the weekly, coming back into support here on the daily. So we've got some general breakdown happening in these markets. The big question is, how far does it want to carry? And we should get an answer to that very quickly. Either it's going to carry right away and just keep going, or you're going to get some sort of a bounce so that you can measure how weak or how strong this market still is. The one thing you're not seeing volume pickup. If you're not seeing volume pickup, the reason for that, of what's going on, is that money isn't leaving the market so much as going somewhere else. I mean, there's still a lack of sellers at lower prices. We're not seeing volume escalation in any great sense on any of these yet. Now, that doesn't mean it can't happen, right? Because things, the market shows its hand as it shows it. Right now, sellers don't want to step up and sell, so the money that's coming out of particular stocks is simply going somewhere else. And we've seen a large part of that looking at like commodities, for example, the XLB, the materials. Money has flowed into other areas where it's taken off, like in XLP, XLU, which are fighting interest rates. And the two big things that are happening right now, actually they're related, is the Fed tapering, the concern about it, and what that's doing to interest rates. Interest rates are going up, bonds are coming down. That's putting a lot of pressure on interest rate sensitive stocks because now they have a competitor. Those competitors, we're not seeing. Let me clarify that. When I say interest rate sensitive, I'm saying utilities, the consumer staples, those areas where They pay good dividends. Those are the ones that are getting hit because now people can put their money in a CD, for example, and without the risk of principal, right? There's no risk in principal, or at least it's assumed to be zero. And so you can go out and get a CD at 3% or whatever the number is now, compared to a 5% dividend. Why would you take the extra risk? Well, a lot of people are deciding not to. Money's coming out of there. Now, some of it is just staying, some of it's going into something like that. That's staying simply is rotating somewhere else. And where does it rotate? Well, it's rotating in things that have underperformed. Gold, silver, precious metals in general, industrial metals, all of those. They've all underperformed, and they're seeing money come over to them versus leave the market. I want to look real quickly while I'm on the general indexes. I want to look real quickly at Europe. This is the CAC. The CAC is up, making new highs. It's a suspect break twice over now, but it just keeps hanging up here and pushing. Now the CAC is a little bit different than everything else. The DAX is struggling to get over its highs. It's up there, and actually I was looking at these volumes when I came on. Looks to me like they changed the volume scales on my vendor, and all these past ones are wrong now, so I'm going to have to re-get, if you will, all the volumes and redo these again. You never know what the vendor's going to do here. But anyway, the point is at 8557 at the top, we got up to 8435. That's on a weekly. You can see here on the daily, it's been testing and testing at these highs. Can't get over it, but it's hanging pretty tough. It's just not giving it up. So you're seeing Europe be attractive. And again, the same thing where I was talking about money going to precious metals, money going to industrial metals, so forth, even grains, for example. Well, the same thing. Money's going over to Europe. The relative performance of Europe is better than it is here in the States at this particular point in time. Now, it's not true of everything, though, because if you go look at London, for example, London is actually pulling back, and it looks like they're trying to roll over just like we are, and you can see it here more clearly on the London exchange. If I look over in Asia, and I'll start with Hong Kong. Hong Kong is going gangbusters on the way up, and it's going into resistance now. There's some big bars up there. The bottom of this one is 22,470. We were thinking it would try to get into it. It got into it already. Volume was 85.4 going into 104, so it doesn't have the volume. If we look at it on a daily, it looks to me like on a daily it can get even higher, but you can see on the weekly why it's starting to slow down at this price point. Hong Kong, probably one of the stronger markets in Asia. Taiwan has been having a tough time. This is just chips, but Taiwan looks to me like it's finding a little bottom. It's going to bounce higher. Japan, of course, is so dependent on the yen. We've talked about Japan coming back into the support zone. It's back in there now. It's trying to hold. It's kind of just like it's critical for us, it's critical for Japan this week. This week is probably going to give us a good sense of what's going on. Another one that actually, going back to the commodity thing, that started to pick up this week was Brazil. Brazil actually got a big spike up on volume. You can see it here. This thing just keeps climbing. Looks like it's going to try to move even higher. Brazil, of course, is a commodity country, and that's a big reason that that particular index is working higher. Same thing with Canada. All right, let's go back and look at the sectors now. So if I look at just the general markets, we know that ABCD's down have completed. We know that we're at a critical point where it's going to try to turn. There's nothing in the indexes to tell us it's ready to do that yet. So if we go look at the sectors, then we can look at sectors to tell us what the indexes might do next. And let's start on the weeklies, of course, with the IYT. IYT is doing a retest regen, so it's the same story. It's hitting it with a little bit more volume. And so the breakout bar had greater volume, 1.9. The low here is 1.465. It's going into the bottom, tested the bottom. I would think it tries to test one more time tomorrow, and then we'll get a flip around in that if it's going to flip. XLB tested the top, failed at the top, didn't have as much volume. That one actually looks like it wants to retrace. That's true on the weekly. It's also true on the daily, and that does look to be the case there. The XLE had failed on the weekly at the highs, didn't have as much volume, has been pulling back, continues to pull back, but you can see volume's not expanding as it's coming back with any significant amount. That zone is coming back into, looks to me like it's going to try to hold. So this too is going to give us a test, and we're going to see whether volume expands or not. XLF has been the story for a good year and a half now. Most of this year has been leading us up. On the weekly, it's back in to do the retest regen now. And if I look on the daily, it couldn't get a bounce, but it's coming back into the support. Again, here is where we'll find whether it's going to do it or not. He had a big push down in volume. Wasn't as much as what was there. We had 596 over here. We hit it with, I take that back, it was 620. So it was a little heavier than I thought. It's just not as heavy as 612. Yeah, it's coming back with decent volume. The biggest bar is over here at 1 million, and that's 1994, and we're trading at 1998 and 99. So again, that little zone is going to be the test. That price, 1994. That's where it either bounces or it doesn't. So every one of these sectors, other than the XLB, are at points where they're going to test, and that's true on a lot of them on the weeklies and the dailies. Here's the XLI, top of that on the weekly, 4470. You're coming back at it, you got the 4477. Volume's lighter. Again, the same sort of thing. Wants to test. We'll see if it can break back down or not. The bar's coming into this, the breakout bar here. 4447 was the low. That prior highs 44.26, and yeah, that's going to be the test, and the volume's just not there even with the gap down. And notice all of these finished off ABCDs on that Thursday drop, and they all went sideways pretty much as a result of it. XLK is like the XLB. XLK failed at the highs. It failed here at the highs, had less volume. That one wants to retrace. So you got two sectors, with the XLK being the more important one, wanting to pull back. If we look at those other two, they're already pulling back. They've changed to sideways on the intermediate term already, and yeah, this one actually still is sideways. There was nothing. Oh, this is kind of an anomaly actually. It's gonna really test when it gets back to here if it does, but it's actually got a support zone here. I don't think it's going to get that deep. This has turned into a big range trade. This is the consumer staples. Here is where the break was. Got the bearish move. Again, coming back in a big volume. Doesn't have the volume, even with the interest rate, exchange differential where people are coming out of these. That does look to flip around and try to hold. XLU is in the same boat with respect to interest rates. Big spike back down. This, remember, was the first sector that turned initially for us and gave us a heads up. And it's hitting it with pretty good volume, but it also looks like it will try to hold. So when I look at the sectors still look to me like they're going to try to hold. And that gives me a better feel that more than likely we're going to see the indexes hold, and then we'll see what sort of bounce they get and what they do with it. Test here on the XLV, doesn't have the volume on the weekly, and it's about to test the retest regen here. 49.13, got as low as 49.34. I would expect that will hold. XLY, and let's see what she looks like. Volume expanded pretty well there. Okay, so that volume is 36.5, 35.5. The low is 58.06, 58. 58.09, closed on 58.09, and that is the swing point high, has the volume. Now I was going to get into the bottom of the breakout bar, and that close the prior day was prior week was 57.26. Yeah, this will be a good test. This is the one that came back the hardest, XLY, in terms of volume. And that's going to be a good test. It's a test on both the weekly and the daily. And that will be one to watch. So in general, though, I believe the sectors are telling us that this market is more than likely going to get a bounce. Let me look at the OX markets. So I'm going to start with the dollar, because the dollar was getting beat up pretty bad, it actually tried to bounce and then continued to get hit. There was a big gap down, not a gap down, but a big wide price spread bar down. 51.5, it actually had more volume when it came in to the low, so yeah, so that it came into a support zone, though it didn't have as much volume as prior. Let's see what the euro's doing to see if there's a decent read on it. Dollar looks like it could go higher. Okay, the swing point high, 132.89. Well, that was a failure over and above. Yeah, that was a failure. FXE looks like it's going to try to trade lower, which would help the dollar. You don't want, well, it depends on what you want, if you want the market to be bearish or bullish. But if you want the market to hang up here or potentially go higher eventually, you really don't want fast moves in currencies and interest rates. Those things can almost inevitably, they lead to a lot of churn and volatility increase and things of that nature. So a fast move in either of those is a problem, and that has been what's happening. If I switch over to the TLT, that has been what's happening with the TLT. This has been a fast, steady drumming of interest rates, right? Interest rates have pushed higher and higher as bonds have just gotten killed. Now, bonds have overextended one more time. They've done this several times already on the way down. They're still groping for a low. They can't seem to find one, and interest rates are doing the opposite, in that they're going up and up and up without any reason to come back so far. And I don't see anything on here to stop it yet. What you need to see to be bullish on the markets is you need to see bonds flip around. Bonds need to come back up. They actually need to steady and take away this edge that's happening on interest rates, because interest rates, the fear of rising interest rates, is really what's driving the weakness that you're seeing in the market. So if interest rates continue to go up and the bond just continues to get hit, that's not a good thing for the markets. The markets are not going to handle that well, and so that's a real issue. You don't want to see a fast move, and right now you're getting fast moves in the interest rates. Let me quickly look at a couple other things and take your questions what time I have. If you want to pop in a question there, I'll try to get to it. I want to look at oil right quick. So oil's up testing the highs. That looks like it's going to fail up there. Let me look at the broad commodities, and then I'll take a quick look at gold and silver. They broke higher last week, so RJA, yeah, it's finally putting in a bottom, it looks like. Let's look at silver and gold. So gold got up into, on the weekly, got into the big bar. Remember, we had a huge bar there. We were thinking it would test it. Well, it didn't even test it. It just went straight into it. 130.51 was a low. You got up to 133.27. Yeah, there's not a lot of volume here yet. I mean, it is picking up some, which is good. But you're into that big bar, and if you can hang up there, you can go a little bit higher. You got the next swing point low up here, retest regen on it coming, and there's really nothing until then. So that's where that zone is at, is around 134. So So almost there. Did a doji on the daily. That could be an issue. Sometimes dojis end up being turns. That one is benign at this point. You can't read into it. But if you look at the silver market now, the silver market actually had a big spike up in volume. Also got into that same big bar down. But on the daily, silver actually failed. 2238. Excuse me. 2238. Closes at 2234. Got over, back under, after an extended move. That's a 2-bar reversal. That thing should go sideways to down tomorrow. And that would be a good tell here as to whether that one's going to retrace and give a fairly good retrace. Now, given the big wide price spread, high volume bar 2 days back on Thursday, this market's going to be hard to tear down now, unless that was totally short covering and they just simply take it right back away. Given that they didn't do it on Friday, makes me believe that it really isn't that case, and so there is a turn taking place here in the silver and gold markets. And that turn we've been looking at for a while, and we've been talking about it for a while. And silver now is flipped around and started confirming the strength that has been in gold. Okay, so one reminder here as I get down to the end. I want to remind one more time here on TATV. You can click on TATV. It'll pop you in here, give you the device, the channels. If you're on a mobile device, you can actually watch us now on mobile devices, archived. Make it easier for you to take it when you're jogging or whatever you're doing, or you're out and you just want to see what's going on. So we've made a YouTube channel, made it available to you. We're starting to work on the podcast piece of it, get that ready for you as well. And then of course you can still do the live streaming like you have been, just popping into TATV and doing the live streaming. So that's where we're at. That's where the markets are. I think this week, especially tomorrow and the next day, are going to be big tells. Tune back in. Let's see what happens tomorrow. It looks to me like we're going to get a bounce out of this, and then that's going to be the one we have to measure against to decide what's next. All right, I'm going to leave it at that, folks. I appreciate you being there. Tell a friend, tell two. Help us help you. I'm L.A. Little. This is and was your weekly TA Wrap. Have a great one. Good night, folks.